good afternoon. You're watching Closing Trades on 80 now. I am Anisha Jain. With me is Avan Dubash, and it seems like there have been breaks that have been hit for the market because for the last 6 trading session we were comfortably in the green, but today it's red on the screen. It's stemming from the fact that the handover was weak when it comes to the US markets as well as what's happening to US regional banks, and then of course there was a lot of nervousness when it comes to crude 10-year, and there's a complete risk off which is working out at this point of time, and markets are of course watching out for the FMC decision as well. Yes, 25 basis point hike is what the street is expecting and penciling in, but the commentary will really hold the key with respect to what's happening with the economy, plus whether this is going to be the last rate hike of the cycle or not. Separately, back home is the public sector banking space, which is sulking today. Of course, there are concerns stemming from Go First, which is filed for voluntary insolvency. So we are watching out for how that story develops. And then crude has hit $75 per barrel mark, and this is the first time it's happened since March of 2024. And that's telling you the risk of which is at play. And to add to that, the India 10-year yield has now slipped to the levels of 7.03. So a lot of weakness that you can talk about when it comes to the Indian market. But 18,077 doing all right, 70 points lower.
Yes, and at least there is a little bit of positive in the fact that you've got the European markets, the head of that Fed decision, that have managed to start off on a positive note. So maybe that's the redeeming factor. But yeah, as you said, Anisha, a lot of moving parts. But you highlighted Go Air, but I just want to run you through a lot of the other stocks that are in the news. There are a number of them, and the stocks are duly reacting. Manappuram Finance, for instance, is in the spotlight as sources indicate that the ED has raided the offices as well as the premises of the promoters in multiple locations that are linked to the company. And this is for allegedly 100 crore rupee collection from the customers and allegations of money laundering against the promoters. There you have it, the stock clearly being beaten badly out of shape. Moving right on then, as you said, the Go Air fallout is really spreading across the markets. You've got the likes of Bombay Burma, Central Bank, BOB, Interglobe. These are all the listed counters that have an implication. Do remember Bombay Burma owns a stake, has ICD exposure of about 85 crore rupees. And you've got clearly this news that is putting pressure. But on the flip side, you've got an Interglobe Aviation expecting a higher market share after this news. And it's the first bankruptcy. Lenders of Go Air, the likes of Bank of Baroda, Central Bank, etc., are reeling under pressure on the back of that. Moving right on then, you've got Aztec Life, which reported its first ever quarterly loss in the last 15 quarters. So that stock as well is under pressure in today's trading session at about 13.01. And then there's Adani Wilmar. Consolidated revenues were down about 7% on year, and margins as well contracted to 2.5% versus 2.86%. So that's actually Adani Wilmar that I am flagging off. But let's bring on board then our chartists to find out their views on the markets. We've got Naresh Mirani as well as Kunal Bothra joining in. And Kunal, let's get in a take from you. As we said, it seems like the brakes have been put now on that rally, but that's not something that was unanticipated at all.
Yeah, so I think yesterday, as you know, I changed my stance from being on the buy side to going into the profit booking mode because I was expecting the 18,200 to act as a hurdle. My sense is still that maybe over the next couple of days we might see the index taking some bit of more time to try and break past about the 18,200 levels. It may not be an easy task unless there's some significant positive which may actually come back from the US markets and especially the post-Fed policy event. So I think that could be the only trigger where the markets can quickly break past about the 18,200 mark. But other than that, I would expect that this consolidation may continue for at least a couple of days. The bias is still on the bullish side, but it's just that we are waiting for a correction. The correction has started to creep into the indices. Hopefully, if we come back towards the 18,000 mark, we may go into a contra buy mode.
Okay, so that's the take coming in as far as the Nifty level is concerned, but at least 18,100 is on the cards. There has been a bit of a spike in the last few minutes itself. Naresh, your word on the market texture at this point of time, and I wanted to particularly talk about some of the public sector non-bank entities, the likes of Engineers India, which is up 17%, Rail Vikas Nigam 10% higher, and BHEL also trending higher by 7%.
Talking about PSEs first, so I've been very clear that PSEs look very, very interesting, except of the PSU banks. We've seen breakouts happen in a lot of railway names. One should be looking at booking profits here. Look at the defense names which look interesting. So something like a BEL which has given a fresh breakout, a Bharat Dynamics at a new fresh high, 52-week high, Hindustan Aeronautics at a new 52-week high. So that's the sector to be in. Defense PSEs and then power PSEs could be still good. Smaller names like NHPC, SJVN, A lot of these stocks are coming on the breakout list. Even a NTPC and Power Grid could still do well. So in the PSE basket, one should start focusing more on the power names and the defense names going forward. In terms of railways, we could be overbought in a lot of these names. Time to book some profits or a lot of profits out of the railway names.
Okay, PSCs, defense stocks, that's what Naresh is looking at on the charts. Let's connect with Nitin Raheja as well, who's joining in on the fundamentals. Hi, Nitin. Good afternoon. I want to get straight to it and get pretty stock specific then, and a view exactly as to how you're reading into the entire debacle that's taking place with respect to Go Air. The fallout of that has led to a number of stocks and companies that have exposure to the to Go Air and Go First coming under pressure. Just wanted to understand what exactly this means for the aviation space, how you believe the story is likely to play out down the line.
Well, I think it's from a corporate perspective, I think it's good for the, the leaders out there, whether it's Indigo or whether it's even the Tata Group. I think their whole entry into the space has sort of worked out well for them. So I think you should, see, them doing well in the form of prices being firmer because you have lesser options to choose from. From a passenger perspective, it's not the greatest, when there is a consolidation that happens and a few players start dominating the sector and, start gaining pricing power. Till you get the whole, expanded capacity or new planes coming into the market. Of course, some of the banks, who have an exposure will, it's sort of a fresh headache that comes their way as such. But I think, largely, I think it's not something which would have caught people by surprise because, if you have been traveling, you would have sort of noticed that the frequency of, Go Air, was pretty erratic in terms of the schedule. So they were struggling with this problem for some time now. And I think it's as a preemptive move is what they have done as such.
Okay, in fact, we spoke with the management of Go First earlier, Mr. Khona, and he talked about how they are expecting a revival soon, and they believe that they are headed into the Section 10 NCLT just to find a resolution, and they are not looking at exiting the airline business. Listen it.
Reason why we have filed application under Section 10 is that Go First has a huge potential to revive and operate again very soon. And that is the reason why, as I said, we have preferred Section 10. Why do we get that confidence? Because we have been operating with the best operating parameters under the operating cost, which is comparable to the industry. And we were only affected by the non-availability of the engines by Pratt & Whitney. Had Pratt & Whitney complied with their obligations under the contract, we would not have faced this problem since last 3 years. Had Pratt & Whitney, even after not complying with the obligation under the contract, had they even complied with the arbitration award, which we were forced to go into, which was rendered on 30th of March, even if they had complied with that order, I think we would have been home and we would have been growing in our operating fleet. Promoters had to fund the liquidity gap, and promoters did at all times. And as you may be aware, promoters funded 3,200 crores in the last 24 months. And I would also be happy to note that in this process, that when we all know that Indian aviation went through very difficult times, the government of India came up with the ECLGS scheme, and we were one of the beneficiaries of that scheme, where we got a sanction of 1,500 crore, of which we already drawn 1,300 crore. So effectively, the promoters and the bank, through the government support, have infused almost 4,500, 4,600 crore in the last 24 months. So I think promoters have never defied or never denied that they would infuse further fund. Whereas there is we have effectively in India right now, we have 55 aircraft. And therefore, we have a parking slots for all the 55 aircraft. We have also operational slots for the flights which we operate. The slots are not taken away immediately just because I cancel the flights for 2 days or 5 days. The slots are basically an enabling for any airline to plan for its affairs for a long-term basis. and therefore I don't expect or I don't foresee that the slots will be taken away, because it's a coercion, or I would say a force majeure issue which has affected us, and we are therefore of the firm belief that the airport operators would not take away the slots, because it's a temporary issue which I think we'll be able to resume the operations very soon. It's not something that we are looking at a grounding of the aircraft or grounding of the fleet forever. And I'm sure the resolution I would say the resolution is the foremost I would say requirement of this resolution process, and we will be able to hopefully get back to the operations soon. Well, I think it's all the bank loans are not only secured by the company assets, but I think what is more relevant, and I think the bankers are very comfortable, is that they have a collateral over and above the company assets, collateral in the form of unencumbered land of more than 94 acres in a prime. Major bank loans are, I would say, almost all bank loans except for the ECLGS, they are all working capital facilities. There is only the interest which is to be funded or which is to be serviced every month. So there is repayment pressure is very limited. The repayment is only in respect of the ECLGS, and that is also has a moratorium of 2 years, and balance repayment has to be done in 4 years. So the presently monthly repayment is only in the range of around 50 lakhs, 60 lakhs. So first of all, the repayment pressure is not significant.
So that's the word coming in from the Go First management. But in the meantime, we have some of the tire stocks which are also reacting positively. MRF, of course, came out with its earnings and they were better than expectation. The net profit came in at 410 crores. That compares with 150 crore last year. The margin has come in close to 15% versus 10.2% that they reported last year. And then you also had CEAT, which was gaining ground since the start of the trading session itself. In fact, that counter was up 6 to 7% the last time I checked. Nitin, I wanted your take as far as the tire stocks are concerned. What's your take, and should one be a buyer in any of these tire stocks, Nitin?
They're really seeing a virtuous circle of two things. One is volume growth has been pretty strong, especially if you take the PV segment of the market, and CVs also. And that's where MRF has really benefited, like you said, and the other tire companies would also benefit. The second is the inflationary pressures that they saw as far as raw material prices were concerned last year have considerably eased, after that. And so in that sense, I think this quarter and I think the next couple of quarters, you should see all tire companies actually do very well.
Would you have the same view when it comes to the consumer durable names as well? Because for Havells, it was a bit of a miss in the quarter gone by. Lloyd's continues to be a pain point. And even the other durable names so far hasn't managed to enthuse the street. Is there any name out of the entire consumer durable pack that you would recommend, Nitin?
So, as a policy, we don't really give recommendations on the individual stocks, but, the durable sector actually, especially the ones who have a exposure to the air conditioning segment, have actually had a great quarter. So whether it's the contract EMS guys in the sector or companies in this segment, they've actually done very well, considering that the early onset of summer, and also that it's been an unusually hot summer right at the beginning itself. So I think from anecdotal sources, when we talk to dealers, it seems that sales of air conditioners have done well. So within that pack, I think you could probably find some place.
Havells, the electric consumer durable segment is showing a decline of 14%, though Lloyd's consumer is up around 32%, because in consumer durables, they're talking about how the fans were impacted by higher channel stocking, and that's the reason they are seeing a bit of a decline when it comes to the consumer durable segment. But time now to get the closing trades from our chartists. Naresh, what are you spotting?
So that is a buy on Tata Power. The stock looks interesting. After a long time, the stock has started making breakouts on a short-term chart. The resistance of 200 has been crossed in the last two sessions. So expecting a move towards 220 in the short term.
Okay, let's find out what your closing trade is, Kunal.
So that'll be a buy on ICICI Bank. My sense is that the stock is making a very strong comeback, consistent up move for ICICI Bank. Even intraday dips are being bought into. So that's a stock which I'll be confident of buying. my sense is that the stock could probably scale past about the previous highs of 950 and go even beyond that.
All right, there you have it. That's ICICI Bank and scale levels on the upside. Let's move right on and slip into a very short break right here on the show. We'll be right back. Thanks for staying on with us. A number of newsmakers in today's trading session, Manappuram Finance being one of them. As you can see, it's down and out in today's trade after sources have said that the ED is carrying out searches. This is at several premises. Let's bring on board then my colleague Samir, who joins in with the latest. Samir, what exactly are the allegations and how is the company responding?
Yes, definitely a big action that has been carried out by the investigating agency ED, Enforcement Directorate. What we are getting to know from our sources that ED has carried out search operation at multiple locations that are connected to Manappuram Finance Limited. The major allegations that has been raised is that Manappuram Finance Limited has raised beyond 100 crore worth of money from the customers, and that too not following the RBI norms. There is also allegation that proper KYC norms were not followed while collecting this huge amount of money. So some serious allegations have been raised, and after which ED is carrying out search operations at multiple premises that is connected to Manappuram Finance Limited. We are also getting to know from our sources that search operation at the promoter's residence, Mr. VP Nandukuba, it is search operation is going on there as well. So in the entire development, we have tried to get a word from Manappuram Finance Limited. So they have acknowledged, they have confirmed that yes, there is a ED search going on at their registered office, and Manappuram is fully cooperating with the investigating agency. They are providing the documents, whatever is being asked, and they are cooperating. But yes, a big action that has been carried out by the investigating agency, multiple locations connected to Manappuram Finance Limited that is being searched by the investigating agency, and the major allegation relates to that without following the proper RBI norms, more than 100 crore amount has been collected from customers, and proper KYC norms have also been not followed.
The latest coming in on Manappuram Finance, the stock sliding as much as 12%. Nitin, what would be your take? Is this a knee-jerk reaction on the stock, or one should use this opportunity to buy names like Manappuram Finance?
I'm afraid, we don't really have an opinion on this because we don't have enough information to really comment on.
But Naresh, your take as far as the stock of Manappuram Finance is concerned, after the correction, would it make for a good buy? And similarly, if you can talk about Engineers India, 17% higher.
So Manappuram is a tough one. The stock has not been a performer over the last 20 years, and say it's been sideways to down only all through the last 3 years. In the near term also, the recovery from 100 to 130 was also laborious. It took a long time. And again, from those levels, we've corrected. 100 is the base where I think it should, 100 to 105 is the base where one could go, say, in terms of a bottom fishing trade. But I think there are better opportunities available in the market, so would avoid. Engineers India looks very interesting for the fact that the stock has finally crossed that 90 mark, which has been a resistance for the last 2 years. It topped out at 90 in 2021. The only problem is the stock has made a single day move of 15-17%. So would wait for a little bit of a fade off tomorrow and buy it closer to that 90 mark if it comes. That would be a good buying opportunity with a medium term outlook.
Okay, meantime, let's get in a view then on some charts and find out how they're panning out in today's trading session. Naresh, wanted to understand how you're reading into the charts of something like an SCI in today's trade and a Mahindra CIE.
So SCI, again, the whole PSE basket looks interesting, but again, I would wait for a little bit of a fade off here. Not really interested because the chart is a little odd given the recent demerger. Mahindra CI looks interesting for the fact that the longer term picture has been very strong. The stock after a long time, from 2015 to 2023, the stock would always get a pause at 300, 350 levels, made a breakout move, went to 450, retested 330 levels, and now again making the next leg of the move. So out here, this is something which could slowly and steadily get into an uptrend, a buy on dips from current levels.
There You have it. That's a view coming in on some of today's movers in trade. But as the 5G rollout gears up in India, my colleague Aishwarya Patil caught up with the CEO of Bharti Airtel. Let's listen in to that exclusive conversation on ET Now.
We are now in about 3,500 cities. We are rolling out almost 40 cities a day. So it's a very, very manic pace of rollout that is happening. Our capex that we've always indicated, over a 3-year period is more or less in line with what we normally spend. There may be some advancing of capex in a given year, which is the rollout year. But if you take a 3-year view, it will be around the same level.
Two-part question. One is that 5G tariffs are largely, there's no tariff hike that you've done for 5G. Is that sustainable? And globally, India's tariff is one of the lowest in terms of 5G. Is that a sustainable level at this point? And will we see some hike coming in, or will it be just, according to user data?
Yeah. No, I don't subscribe to the view that 5G must have a different pricing. Because if you price something differently, then out of 100 users, maybe 10, 12 will take it, which means your overall revenue doesn't go up. But I do subscribe to the view that the ARPU of the industry needs to go up. Today, the return on capital that the industry gets is 8%, which is as much as you would get in putting your money into a fixed deposit. So why take all of this risk? So you need greater financial health of the industry because there's a lot of capital going into it. The only way that will happen is ARPU goes up. Today, India is the lowest in terms of rate per GB as well as ARPU anywhere in the world, even compared to sub-Saharan Africa. So yes, ARPU needs to go up. It's not in our hands. We do what we can, but the industry needs to raise.
Follow-up question, last one. What is a sustainable level of ARPU to your mind?
Well, we've always said that we would like it to be close to 200 in the short term, which we are almost there. We were 193, about 190 rupees last quarter, and then ultimately get to 300 rupees. Which is really a sustainable level for the industry. It's still much lower than anywhere else in the world. Still much lower than anywhere else in the world.
Okay, so that's about the entire telecom sector, but and the important statement coming in from the Airtel management, wherein they're talking about that they don't expect or don't see a reason why 5G should be priced differently. Interesting, because the street was expecting there is going to be an increase in ARPU once the 5G rollout happens, but that doesn't seem to be the case at this point of time. Nitin, how are you viewing the entire consumption space? And I mean the staple names, the likes of HUL, Nestle, etc., Marico, Dabur, because we're expecting numbers from Dabur also to come by tomorrow. Would you be a buyer in any of these names?
Not really, because while these are high quality companies and businesses, but a lot of them are almost priced to perfection, especially when you look at them with relation to the kind of growth numbers that are being delivered as such. So great businesses, but unfortunately we don't see a lot of upside happening there. They're more defensive bets that one can take in markets. But I just think that given the kind of consolidation and correction that we've seen in valuations across the space, there are plenty of other areas that one can be in.
Time tomorrow as well, the street will closely be watching out for earnings from Hero Moto as well as HDFC. Those are among the Nifty 50 companies. Other than that, you have something like a Bombay Dyeing, Tata Power, CEAT, as well as IDFC for Source Solutions and IIFL Wealth among the others that will be declaring their quarterly numbers. Wanted to get in a view from you then, Nitin, as to what exactly you'd want to hear out or see when it comes to Hero MotoCorp in their earnings. The ET Now poll is expecting that margins could improve on a sequential basis, and we're also expecting the profits to come in higher at about 762 crores.
I think the key element for us is to watch what's happening in the rural markets. Entry-level motorcycles have actually suffered in the last many years in terms of their volumes. In fact, the volumes have degrown over a period of time, while it's really the higher-end motorcycles which have done really well. And that's where you've seen some of the other peers actually grab market share. The other element has been with regard to the EV strategy that all these two-wheelers, because, it's our belief that in the auto space, the fastest adaptation is going to be first in two-wheelers, and the maximum volume will come from two-wheelers. So really speaking, we would want to hear commentary as far as what's happening on the EV side, as well as with respect to the rural consumption play.
Right, stay on with us. Or rather, thanks so much, Nitin, for taking time out and joining in with your fundamental take. We'll slip into a very quick break right here on the show. Be right back. 18,076 on the Nifty.
Welcome back. You're tuned into closing trades on ET now. Well, for the markets, it's holding on to that 18,073 mark. So 18,100 has been a bit of a sticky zone for the trading session today, down about 73 points. And for now, at least the Dow futures are suggesting that they're likely to see a bit of a green on the screen in the US market ahead of the FOMC meeting. There's almost 50 points higher on the Dow Jones, and even the European markets have started on the front foot. So maybe we'll have positive cues on our hands when we start the trading session tomorrow after we hear from the Fed governor as well, Jerome Powell. Moving on then, in terms of the stock specific action that we are witnessing at this point of time, Manappuram Finance is one stock which is down about 12%. Mantesh, do you have a view on Manappuram or any other select NBFCs that you want to talk about?
No, not really, not on Manappuram. Just that this seems to be a very specific event related to Manappuram Finance only.
Entire PSC basket, because the non-banking names, Engineers India, RVNL, SGVN, NLC India, they're all on a tear. Would you recommend any of the public sector entities as a good buying opportunity?
Generally speaking, public sector enterprises, if are in a monopolistic kind of business, then they generally tend to deliver superior returns to shareholders. But then, generally speaking, there is also an impending threat of typically a dilution. Either there will be a dilution in the public sector undertaking, or the government itself disinvestment. Both these events are generally speaking not good for any company per se, but PSE enterprises are prone to such actions. That being the case, I would be very selective in recommending any of the public sector names. Some of the names that you said, NLC, for example, is not monopolistic in nature. Or take some of the railway company. On the other hand, some of the railway companies have a monopolistic kind of business model. They might work.
Okay, what about your exposure, Mahantesh, to the entire pharma space? How are you advising one to allocate funds to this sector?
Fortunately, pharma, which used to be a very bright spot as far as the Indian markets are concerned, a decade back, has gradually deteriorated in terms of the shareholders' keenness. Simply because many of these pharma companies, even back then, were a product of one wonder drugs. Typically, they would have capitalized on off-patent drug, make a killing in terms of exclusivity and so on and so forth. Those opportunities now are kind of over. Moreover, over the past decade, we have seen gradual erosion in generic medicine pricing, which has directly affected the Indian pharma industry. And additionally, many of these pharma companies are dependent on ingredients or inputs which come from such regions as China, where there is either an uncertainty surrounding it, or there is a huge amount of inflationary pressure coming in. So the business model of a pharma company in India currently is, quite frankly, on a global basis, is quite broken. It's only the domestic piece of the pharma companies which is really doing well, and I find many of these pharma companies are reluctant in actually up budgeting their R&D expenses. So that's something is what is a concern for most pharma industry. It will always therefore form from a very minuscule portion of anybody's portfolio.
Kunal, what's your outlook on Indigo on the charts?
Well, after such a kind of a strong up move and the news flow becoming extremely positive, the stock price looks a bit more, I would say, overpriced, because I would wait out for a correction for interglobe aviation on the short-term basis. So maybe if today's gap, which is around 2001, I think 2080, 2100, is the lower end of the gap. So if it comes closer to that 2100 mark, that could be a slight better risk reward to go for a contra buy on interglobe aviation, because after such a kind of a strong up move, it's just that the stock sometimes enters into an exhaustion kind of an upward trend. So buying at the fag end of a price up move may not be a right strategy. I'll wait out for a correction, at least 3% to 5% correction to begin with could be a good starting point.
Kunal, your take as far as the crude oil prices is concerned, because WTI is now around that $70. Brent has hit the mark of $73 to the barrel. What are you spotting on the charts?
So, Anisha, if you remember in the morning, I was discussing on Chartbusters that how the Brent crude has formed a classical bearish head and shoulder pattern, and we are just about nudging or nearing the breakdown of the major pattern, which is visible on the weekly and the monthly charts for Brent crude. The breakdown point is around $72 per barrel. So my sense is that maybe another $1.5 for Brent crude, and if the asset sustains above the 72 mark, we could expect a much more sharper correction. So what we're seeing in the last 1 or 2 months, multiple attempts towards breaking the 88 mark that failed, and now consistent attempt towards breaking the 72, 73 mark. Eventually, I believe the levels of 72 could probably be broken down, and we may see a sharp correction. So flagged off near-term targets of $60, $62 for Brent crude over the very near term.
All right, stay on with us. Lots more to talk about. Tomorrow, all eyes on important earnings, including HDFC, as the company is set to deliver its earnings. Let's find out what exactly the street is working with. We've got Vamakshi here with the ET Now poll. Vamakshi?
Well, a decent set of numbers is what we're expecting from HDFC Limited this time around. When we look at the net interest income, that is expected to see an uptick of almost 9% on a year-on-year basis and is expected to be reported at around 5,000 crores. When you look at the net profit, that is expected to come in at 3,807 crores, an uptick of 3% on a year-on-year basis is what we're penciling in. Provisions, however, are expected to decline sequentially from 370 crores to 360 crores. AUM, that is the assets under management, are expected to see an uptick of 12%. A healthy uptick is expected here, and AUM is expected to be reported at around 7,34,900 crore levels. So largely, we're expecting good AUM growth to kick in. Apart from that, the individual loan book growth is expected to come in at 3% on a quarter-on-quarter basis, while the non-individual loan book is expected to grow by 2% sequentially. Asset quality is expected to improve, while NIMs are expected to remain stable or marginally improve. So those were largely the expectations for HDFC Limited, but there are some other factors that you should definitely track when the numbers come out. That would be the expectations on the home loan demand, the commentary that would come in as far as the merger and the asset quality is concerned, as well as the company's outlook with respect to the margins. So all in all, we're expecting a decent set of numbers to come in for HDFC Limited.
Okay, so that's the take coming in on HDFC Limited. Let's go across to Winnie to find out what the expectations are from Dabur this time around.
So in terms of Dabur numbers for Q4 FY23, we have a fair idea of what to be expecting because of the Q4 operational update. We're expecting a mild growth of 6% in terms of the revenue for the company. Profits expected to see a growth of around 22.5%. Margins contraction coming in, pressure on that, 80 basis point contraction in terms of the EBITDA margins of the company. 17.2% is what we're expecting the EBITDA margins at. Obviously, that pressure is coming in because of the international business. One, they're seeing a lot of headwind currencies coming in there. Other than that, in the international business, overall, when you look at inflation, the YOY trend may be slight bit of a pressure that you see coming in there as well. Other than that, domestic growth, what will be leading the growth mainly is largely driven by the food business. Now, when you talk about the health supplement business as well as the hair care business, that is expected to be a bit subdued. Health supplement, obviously, the base was much higher last time because of the COVID scenario that was happening, the variants that were coming in. So we had seen an increase because of the COVID times. The bases were much higher in the last couple of years. So this time, maybe because of the high base, we're going to be seeing a bit of a subdued growth in both health supplements as well as the hair care business as well. And other than that, in the operational update, the company has already highlighted that in terms of the demand trajectory and volume growth, urban has managed to see a good volume growth, positive volume growth. Rural, that has still remained a bit muted in terms of volume growth. So that is a factor that we're keeping an eye out on in terms of commentary coming in from the management as well. Other than that, let's keep an eye out on any commentary on the international business. How is that recovering? Demand outlook for the juice category, that's expected to do well this time because obviously it's summer season as well. Ad spends outlook, how is that shaping up? Because increase in ad spends does impact in terms of the margins, but what is the factor coming into play there is something that we're watching out for. And let's not forget, this is the first quarter after they have integrated and acquired Badsha Masala. So keeping an eye out on that.
Okay, so those are the expectations coming in from Dabur as well as HDFC Limited, but Titan also comes out with its earnings. Mantesh, your take as far as the entire consumption space is concerned, and I'm talking about urban consumption now, not the staples. Titan, Vedant Fashions and the likes, would you like any of these stocks?
Urban consumption side, we are hearing positive commentary from most companies who have yeah, announced results or in a way have interacted with investors, and that seems to be something which is not of concern. Rural consumption is the big thing which is slowing down, and it's now dependent on how the monsoons will progress the next following month. That said, the good news for the consumption side is at least some portion, which is the discretionary side, is now going to see a positive trend given that RBI has announced a rate hike pause. So some of the discretionary consumption items, particularly what you talked of in terms of jewelry, which is for Titan or let's say even two-wheelers, can be positively impacted because you will have the rates now getting frozen, and that concern which earlier hogged the consumer's mind in terms of what the next interest rates would be is now off the radar. That being the case, I think the consumption story looks far better. And from a market perspective, since the index has not been doing well this first 3-4 months of the year, most of the consumption story would, on a relative basis, start looking attractive as far as valuations are concerned when you have an uptick in demand coming up.
Your take as far as Sapphire Foods is concerned, the stock is up around 5%, and then you also have Godrej Properties that came out with a good set of numbers, but the stock is really subdued.
So Sapphire Foods is interesting. Haven't looked at the chart frankly earlier, but I think the recent charts, in fact today's up move, suggests that a major consolidation could actually be over for the stock. Now from 1560 levels, it had fallen down to almost 1140 in a span of the last 8 months from I think August 2022. And now the stock has made a comeback. So that pattern of lower highs and lower lows, even that is broken today for Sapphire Foods. So looks attractive. Volumes are also quite decent today. May not be a great volume day for the stock price, but just based on the price action, I would expect the near-term bottom to be in place for the stock. So expecting trend to begin for the stock from current levels, 1500, 1450 could be a near-term target for the stock. Godrej Properties on the other hand, so the entire real estate pack had a fantastic uptrend since the last 1.5 odd months. Godrej Properties recovered from 1000 rupees to 1300, which means a steep 30%, 35% recovery for the stock price in this kind of a time span. So you can expect that the stock maybe post results etc. could get into a bit of a subdued action, but these real estate stocks, largely likes of DLF, Oberoi Realty and Godrej Properties, my senses are in for a much more bigger upside over the medium to long term. So for traders who have a time frame of 6 months, 1 year, I think they should look out for all of these short-term dips to try and buy into these names.
Short-term dips could be a buying opportunity, but let's take a look at some of the tire stocks as well. MRF was one of the first to report its earnings, and they were quite solid, especially when it comes to the gross margin performance, because that's improved substantially, and there is a rub-off impact on the likes of CEAT, Apollo Tires, JK Tires. They're all reacting positively, so an up move of anywhere between 2 to 5% on all of these counters. But separately, you have the Adani group of companies which are coming under pressure. So Adani Transmission, Total Gas, Wilmar, Enterprises, Green, they're all down and out with cuts of anywhere between 2 to 5%. Nuresh, is there any Adani group of stocks which is looking interesting on the charts?
As of now, none of them. Only one which would be interesting going forward is Ambuja Cements, which is not exactly in the same league of charts. But if you look at 400 has been a resistance for the stock ever since that fall. If it crosses 400 and sustains, it could make a move towards 460. So watching Ambuja Cements very, very closely, because that's an interesting stock.
Do you think that sector is going through a structural change? And we were talking and speaking with Sridhar in the morning, and he was talking about how he's not only worried about the slowdown in the BFSI vertical, but what AI can perhaps do to the entire sector. Your take? Mahantesh, the question is for you on IT sector.
Sorry, I thought you were continuing with me. So basically, on the IT side, this whole trend which is emerging post the digitization wave in terms of now moving towards artificial intelligence, machine learning kind of capabilities, is seems to be a new trend which can quickly dissipate as far as I'm concerned, because most of these IT companies are service providers. They are actually back-end service providers. They're not really on the front-end side. And some of these services, once established, they require really no big further, you know, they do not provide further revenue streams. The major uptick for IT companies would traditionally come from their old workhorse, which is the BFSI sector, and the business transformation that they projects that they keep undertaking from time to time. So IT, which suffered, the sector suffered because of the low guidances provided by most of the top run companies for the year ahead, should gradually start picking up somewhere mid of the fiscal year, not really now.
That's a take coming in on the IT pack, but Hero MotoCorp will also report its numbers. Let's go across to Shrishti to try and understand what the expectations are.
Well, this time around, as we know, there hasn't been any substantial recovery in terms of volumes for Hero MotoCorp, because on a quarter-on-quarter basis, now the volumes inched up by a mere 2%. So, and that's what is we are expecting onto the growth of the top line as well. 2.5% on a sequential basis is our expectation, and the number is expected to be reported at 8,238 crores. When it comes to the EBITDA number, we are expecting a jump of 9.2%. That's on the back of the price hikes that the company has taken. And if we look at their RM basket, that's also expected to be flat on a sequential basis, although the average selling price is expected to be flat on a quarter-on-quarter basis, but the share of exports has improved on a low base. Coming to the margin figure, then a 700 basis points uptick is what we are expecting onto the margin figure. 12.2% is our expectation, and if Hero MotoCorp surpasses that 12% benchmark, then that number we are going to see after Q3 of FY22. Coming to the profit figure, herein we are expecting a jump of 7.2%, and the number is expected at 762 crores. So a flattish kind of a growth expected from Hero MotoCorp, given a muted set of volume growth this time around. But the key to note will be the commentary on the growth outlook going ahead, because as we know, there hasn't been any significant jump in the two-wheeler volumes. So what is the outlook on the volumes? What are the EV sales growth plan by the company, as well as onto the recent announcement of the VRS? How do they see the employee cost coming down, as well as the competition in the 125cc segment? As we see that competition is building up, how are they planning to catch up that and beat the competition? So the commentary will be the key to watch for Hero MotoCorp, but a muted set expected this time around. Back to you.
Hey, Mahantesh, for the auto sector, the numbers in the month of April weren't very impressive, but would you be a buyer in any of the auto names?
It's very difficult to really choose the auto sector in a situation where we have a dwindling rural demand. And we also have a situation where there's no respite in terms of the cost that goes into making an automobile. Most of these automobile companies are off the peak margins that they are performing at right now, and typically are saddled with a low demand outlook. It's one of the key transformation that is happening on the automobile side is a lot of companies are really getting into the EV side of the business. So although it is a very small portion of the listed entity right now, they are seeing a wholesome competition coming in from the EV side. So they have to better prepare for it, both in terms of their own EV products, as well as in terms of countering the the demand pressures that typically are associated with their regular vehicles, the ICE vehicles that they have. But all said and done, I think the commercial vehicle sector is looking definitely better relative to any of the subsegments of the automobile industry. And I would rather prefer to look at the commercial vehicle sector right now, because after a really long time, we have seen inventories levels coming down to pretty low levels now.
Okay, Mahadesh, separately, I wanted your take about the metal space as well. But before that, let's hear out the management of Tata Steel. We spoke to them earlier today to try and understand what really drove the India performance at this point of time and when will we see revival when it comes to the European business. Let's listen into what the management had to tell us and then we can discuss the sector further.
Coal prices went down, Chinese steel companies dropped prices, but today Chinese steel companies are back to very, very low margin levels. So I don't expect this situation to continue for very long, and you should see a little bit of pushback and on steel prices. We stick to that. We didn't hit it last year because of more money going into working capital, plus the fact that we acquired Nilachal for 12,000 crores, plus the fact that we also acquired a few smaller assets on the ferroalloy side. So because of all that, the net debt increased during the year, but we are going back to our target of reducing by at least $1 billion. Ever since we announced it, apart from last year and in all other years, we've exceeded it. So we expect that next year we will be back on track for that $1 billion.
So let's discuss that in greater detail then. And Mahadesh, just for Tata Steel in particular, what have been some of your key takeaways on the numbers in terms of what the upside risks are as well down the line? And what do you believe, do you think that the concerns, the kind of losses that they've seen in the European region are going to remain a stumbling block?
I think the key in the commentary that we just heard from the Tata Steel management is the steel prices, the prices at which the industry is operating at, and there seems to be now a case for better prices ahead, which will mean Tata Steel will start doing better. Moreover, their acquisition spree that they went through in the past few years, starting with Bhushan to Nilachal, etc., is now is in a way over. Now they'll sit down and start working on pushing out better volumes, achieving operational efficiencies, and so on and so forth. As far as the European business is concerned, everything is dependent really on the price that I talked of earlier. Better prices will drive better margins for them. The performance so far has been steady, and I would reckon that here is now a company which will start making good all their acquisitions and all the capacities that they have now gotten under their belt. It's a great future ahead, I would reckon, for the steel industries, particularly, let's say, a company like Tata Steel.
That's the view coming in on Tata Steel. Brokerages primarily have given the stock either a hold or a buy rating post the numbers. But moving right on then, let's find out those BTST trading calls. Kunal, what's on your radar?
So I'll go with a couple of buy calls over here. Again, going with the theme that most of the stocks which are heading towards breakout look attractive. IOC is the first one, looks attractive. I think fourth or fifth consecutive day of up move for the stock price at 82.5 odd levels, would suggest a buy, targets of 86, stop loss at 80. And the second would be a buy on AB Capital, a stock which I've been extremely bullish on, looks attractive. The stock is nearing a breakout, the 170 mark today. So would suggest a buy, 180 as a target and stop loss 165.
All right. Watch out for those two stocks and finding out what Naresh is betting on as his BTST trades. Naresh?
So first is a buy on Tata Power, slowly closing around the 204 mark, stop loss at 201 and a target price of 210. Second is a buy on United Spirits, testing that 795 levels, which has been a resistance for quite some time. Reverted back a little today from the highs of 795.97. A good risk reward trade here, stop loss at 777 and a target price of 9.
All right. Meantime, Mahadesh also wanted to understand your outlook then on the crude price fall. The fact that we have seen crude prices slumping to those 5-week lows. You've also got the all-important Fed outcome that's going to take place later today. What exactly is your expectation as to what could be the course of action?
So the crude oil prices are now crucially dependent on the Fed policy actions because we are somewhere nearing the rate hike cycle end. In fact, one can expect the Fed to close out the rate hikes cycle earlier than what is anticipated, which would mean that the easy money situation that we have thus far seen will start disappearing. With the global activity generally tending to slow down in these months, oil will naturally seem to get affected in the short term, which is what we have seen in terms of the recent price falls as far as oil is concerned. So the only thing that can drive the prices up for oil will be how the OPEC action in terms of its production discipline will start following ahead. If that OPEC starts saying that we will have more, what should I say, more cuts, production cuts, oil prices will go up. So right now, the odds against the this is very high. Odds against the price fall is very high.
Okay, so that's about the Fed decision, which is impending, and that, of course, is the big cue to watch out for. But separately, we'll also get the US crude oil inventories, given the fact we have seen big moves and volatility in the crude prices. That will be important to track, and the ECB rate decision is also likely to happen. So we are watching out for that. Interestingly, earnings should come out from Apple, so that is also another important thing to track, because that will determine how the Nasdaq is likely to move. Back home tomorrow, HDFC, Hero MotoCorp are some of the numbers to watch out for. Blue Star is, of course, another important number. TVS Motors, Dabur, Tata Power, Aptus Value, Bombay Dyeing. These are some of the names. And SIAT, which also reports numbers tomorrow, is actually quite excited ahead of its earnings. So something you need to have on your radar. Weekly options expiry tomorrow, so that move is also likely to play out. Blue Star, apart from its earnings, will also consider a bonus issue. So we'll track that story as well. And in other events, there's going to be, the Gophers bankruptcy plea, which is likely to be heard tomorrow. So that story will continue to grab the headlines. So we'll watch for all of that. For now, it seems like that the market is likely to end below the 18,100 mark. It's the broader markets which have fared better than the headline index, though the Bank Nifty too continues to languish in the red. Kunal, how should one position ahead of the big events which are lined up at this point of time? Would you just suggest to stay light, given there's expiry also tomorrow? What's the recommendation?
So yeah, on the index, it makes sense to stay light. If you're a short-term trader and if you've been riding the trend on the upside, it makes a lot of sense to try and take out some chips off the table. Doesn't mean that the view turns to be bearish on the indices, but it's just that we could now expect the action to shift from the indices and large cap names towards the mid cap end of the market. That's where I would believe traders should try and concentrate on, because the alpha generated into these mid caps and small caps in these kind of consolidative phases or mild choppy phases, if I can say that, is significantly high. So I think it's always better to concentrate over there. Hopefully post the Fed policy event, and assuming if the markets don't show any kind of a major gap down, I would believe that, or rather in case if we come closer to that 18,000 mark, that could actually be a classical opportunity to go for a contra buy on the index back again. So the bias still remains on the bullish side. 18,000 could be a point where would reinitiate longs on the indices.
All right. On that note, Mahantesh, would like to thank you for joining in and sharing with us your thoughts on the markets.